This is the big growth area. This is the focus that Goldman has been kind of honing in on. And you have set out a plan to be less balance sheet intensive and focus more on that third-party fundraising, third-party business. How far along in that journey are you, especially when you have some ambitious plan to even double assets in some part of the business?
That's right. We set out an ambitious plan at the beginning of last year when we formed Asset and Wealth Management. We had an investor day in February, set out some targets, and I think we're well on our way on meeting and exceeding a number of them. The key was growing durable revenues, high single digits. We've done this over the last 7 quarters, getting our pre-tax margin into the mid-20s. We're now at 24%, so we're well on our way. And as you mentioned, we had a couple targets in terms of reducing our balance sheet intensity and fundraising on the balance sheet. We at the time, beginning of last year, were at $30 billion of our historical principal balance sheet. We had a target to get to $15 billion by the end of this year. We're going to exceed this. At the end of the third quarter, we were around $12 billion, so we'll continue to make progress by the end of the year. So we feel really good about reducing the balance sheet. At the same time, we've had a very good time raising funds in the alternative area. We had a target of $250 billion of fundraising, which we've met. We expect now this year to raise more than $60 billion of alternative assets. So we feel very good about the transition from the kind of balance sheet intensive business to a balance sheet lighter business, and at the same time, continue to grow our management fees, and we feel good about exceeding our target of the $10 billion number for this year.
I'm really curious about the private credit part in particular, because you look over across the island over in Manhattan and you see BlackRock making an acquisition for HPS to get much bigger in the private credit space. How does that make you think about the future of M&A in this business? Do you think that you need that M&A to get much bigger in private credit, especially when you yourself have a plan to more than double assets in that business to $300 billion?
Yeah, we feel really good about our position. We're a scaled player in private credit. We've been in the business for 30 years. We launched our first mezzanine fund in 1996. So we've been experienced players throughout the cycle. And we're in a very unique place where we're a scaled player, but we're also closely attached to the world's leading investment bank. And so when you think about that, the origination capability we have, which is one of the key things when you think about private credit, is unmatched. And so I think we think we have what it takes to continue to grow. We have the scale right now, and we think we're going to be able to more than double the business over the next few years.
Does that mean M&A is off the table, whether it is in private credit or another area for Goldman Sachs?
I'd say generally speaking, we have very strong growth opportunities that are organic, and so we're very focused on those. We're obviously paying attention to what's going on in the market, and so if we see something that could accelerate our growth, we'll take a look at it, but the bar will be high.
What do you make of the not just private business, but the public business here? Because in addition to doubling down on private assets, you've been doubling down on the ETF business as well, making notable hires, including from JP Morgan. Does that mean you're setting out to compete and be much, much bigger in this business and take on the likes of JP Morgan and BlackRock?
Yes, I think we are. I think on the traditional business, I would say we're very focused on the solutions orientation there, and so I think we are a leader in SMAs, and we already have a very strong position. We want to become a leader in active ETFs. I think really our heritage is be active asset managers across both the traditional and the alternative side. So we're very focused on that. We've launched 10 new ETFs this year. We're going to launch a number of ETFs next year, so we're going to grow there. I think we see a greater adoption of ETFs just in general, but also within models. I think one of the things that our clients are really interested in is having model portfolios and getting Goldman Sachs model portfolios. And ETFs tend to be parts of these model portfolios as well as SMAs. And so I think we think this whole solutions space, the whole model space, is a big growth area for us.
When you think about the path forward here, what do clients want at the end of the day? Are they looking more to be in those public markets or the private ones? How do you differentiate where there's going to be the most growth in the next 5-10 years?
Yeah. I think clients want a combination. I think it's interesting. We obviously have a very big wealth manager that is focused on the ultra high net worth segment, and so we see asset allocation there. And I'd say people want a combination of public and private assets. And I think it's important to have that combination and have the ability to move between those two sides.
Do you believe that there can be this great convergence where public markets look more like private markets and vice versa? Or do you think they have to be separate?
I think it'll get more and more blurred. I think the difference between the two markets. I think it's interesting. You see some private credit deals that trade secondary, and so you see some liquidity in some of these deals. And so I think there's a lot of discussion. We've participated a lot in private company that have equity that is broadly distributed to employees, for example. Employees want liquidity. There's ways to create liquidity for private companies. And so that always blurring the line between what are private illiquid assets and what are public liquid assets.
Now, the other big business you have, and we were just talking about this in the commercial break, big money market business. You think about that wall of money still sitting in money markets. There's a big investor expectation that that moves. Have you seen it? Are you seeing it as rates start to fall?
I think when I look at our money market business this year, we've not seen material outflows into equities from the money market. So a lot of people still keep their money in money markets. Yields are still pretty attractive. I would also say that our business is probably more tilted towards institutional and corporate clients versus retail clients, but we still see people holding on to their money market assets for the time being.
Now, you don't just run the asset management business, you also run the wealth business. This has also been targeted as a growth area for Goldman Sachs. When you think across the world, where are you going to grow? Are you going to hire significantly to get that job done?
Yes. So we have a long history of growing our wealth business, high single digits for many years, really based on great investment performance and a great client experience. And I think those are kind of the key two pillars driving our wealth business. And we're very committed to continue to growing it both in the US as well as internationally. So we have kind of a long-term plan to add advisors both in the US as well as in Europe and Asia. We've done this year. We'll continue doing it next year and the year thereafter. And so we're going to consistently growing that business. We're also expanding our private bank capability, which is something we had historically done less. And so we're getting better in lending in that business, which is a very good, attractive business to be in. So both of the advisor growth as well as the expansion of the private bank on top of good investment performance and client experience will allow us to continue to grow this business.
If I know anything about you, is that you're a man who focuses on the numbers. Where are you wanting to be number one tomorrow that you are not today?
Look, I'd say we talked about private credit. We have a great private credit franchise. We have a kind of top 5 alts franchise overall. We want to move up there in the ranking. We're a top 5 active asset manager on the public side. We want to move up in the ranking. This goes to ETFs and model portfolios and other solutions parts of the business. I'd say the interesting thing about our wealth business is entirely focused on the ultra high net worth segment. We think we're a leader in that industry. There's not a lot of good data around where exactly we rank, but we think we're a top player globally in that business, but we definitely want to be the number 1 ultra high net worth player globally.